see China flash PMI data climb to a 4-month high in August. Do you think the Chinese economic environment is brightening up?
Yes, we do. You're referring to the August flash PMI, and that is certainly now signalling an expansion. But that was already the case for the official PMI as of the end of July, as well as a whole host of other data for July, particularly industrial production and power production turned the corner. So it does seem that China's growth is picking up, but it's been a very volatile growth environment in China in the last couple of years. We saw a similar growth pick up towards the end of last year, but it wasn't sustained into the first quarter of this year. So yeah, so far so good, but it's far from conclusive.
The sudden spike of the flash PMI data, is it too good to be true?
Well, it's one of two PMIs. It's provided by a bank that sponsors it. It has a narrower coverage than the official PMI. It's more skewed to small and medium-sized firms. So the official PMI has been improving as of last month. We can now maybe see that spreading more to the SME sector. And certainly it tends to correlate quite well with the stock market. So the China stock market has stood out in terms of relative strength to some of the others in emerging markets recently. And this data point probably adds to the view that we have that China growth is stabilizing a bit at a time when it's actually still weakening in other large emerging markets like India.
So you sound quite optimistic.
I would say cautiously optimistic.
Why are you cautiously optimistic?
The reason we're cautiously optimistic is that China still faces a major challenge of deleveraging its economy. It's had a very rapid build-up in credit to GDP and a diminishing return to that credit expansion, and so productivity growth has been slowing. And that's why these expansions that we've seen that have lasted a couple of quarters in recent years haven't really gained traction like they did in the past. And so there's a host of fundamental reforms that we need to see in China to improve the productivity of capital, be it industrial capacity shutdowns and moving up the value chain in the corporate sector, dealing with the local government financing vehicle issue debt, in particular through reforming the funding of local governments, establishing a true property tax base. We also suspect that there needs to be a little bit of policy help on the real exchange rate side. The real exchange rate has been exceptionally strong, and that has been a factor in causing entrenched PPI deflation in these industrial sectors that have excess capacity. So all in all, China needs to rebalance the economy more towards consumption and services. Work we've done suggests that that's already perhaps more underway than the consensus thinks. But there's still a big job that needs to be done here in terms of actually working out the new growth model for China.